You know what I love about the financial independence and early retirement community? They are masters at hacking the system to take advantage of little loopholes when it comes to investing and saving money. They're especially good at finding ways to do very out of the ordinary things, such as access money in your retirement accounts like a 401k and 403b before the age of 59 and a half. And the best way to do this is through something called a Roth Conversion Ladder, which is how most people are going to be able to withdraw money from their largest retirement investment accounts early. In this video, we'll go through what a Roth conversion is. We'll talk about how it plays into an actual Roth conversion ladder, how you can benefit from it by potentially saving thousands of dollars, and then I'll also walk you through step by step what to do to implement this in your life. Then after that, I will give you a real life example so you can see it in action. Hey, I'm Jarrad with 2 A's and 2 R's, and on this channel, we like to talk about all things personal finance, investing, and financial independence. If you're feeling generous in this moment, then please do me a huge favor and Hulk smash that thumbs up button. It's free and it makes me 10% happier. Quick disclaimer, nothing that I say in this video is of course financial advice. After you watch this video, I do encourage you to do your own research as well and talk to an accountant before going through any of this just to be safe. The traditional way that most people are going to access their largest retirement accounts like a 401k or a 403b is by waiting until the age of 59 and a half. This age wasn't just made up for fun though. The reason is because if you withdraw any money from either of those retirement accounts before that age, then you'll pay an early withdrawal penalty. This isn't an issue for someone who is going to retire at a normal age, but it's not very helpful to someone who is going to need to use some of that money during their early retirement. Since this is usually going to be the largest investment account, the early retiree is going to need to find a way to be able to get a hold of some of that money before that age without incurring any penalty. Enter in a Roth IRA hack called the Roth IRA conversion. In case you weren't aware, contributions to a traditional 401k and 403b are made with pre-tax dollars. So you're basically putting off paying taxes on that money today so that you can pay them when you decide to withdraw money from those two accounts at some point in the future. On the other hand, a Roth 401k is funded with after-tax dollars, so you're basically paying taxes on that money today so that you won't have to pay taxes on that money in the future when you withdraw from that account. A Roth conversion is how an early retiree is going to help pay for expenses between the day that they leave work until the age that they can start withdrawing money without incurring a penalty. Doing a Roth IRA conversion allows you to take the money from a traditional 401k or 403b and move it into a Roth IRA so that it can not only grow tax-free, but so that you can also access that converted money as well because it's considered a quote-unquote Roth IRA contribution. Just so we're all on the same page, let's cover how Roth IRA contributions work. At this point in time, an individual can contribute up to $6,000 per year into a Roth IRA. Because that $6,000 has already been taxed, you'll never pay taxes on that contribution ever again, and you can withdraw it from your Roth IRA at any point in time without paying penalties. Now, if that $6,000 was invested in a Roth IRA, which it should be, and it grew to say $10,000, then of that $10,000, you can withdraw $6,000 of it at any point in time because it's your contribution that you already paid taxes on. But you cannot withdraw any of the $4,000 gain without paying penalties. When you do a Roth conversion from a 401k or 403b to a Roth IRA, then that money is considered a contribution and can be withdrawn at any point in time, just like that $6,000 that I just mentioned. For example, if you did a Roth conversion of, we'll say $50,000 from a traditional 401k to a Roth IRA, then you can withdraw that $50,000 without paying any penalties. Heads up that there is a waiting period before you can use this converted money, but we'll cover that in just a minute. Now, this is a rule that you 100% have to know about, or else it could cost you quite a bit of money, so don't miss that part of the video. We can't ignore the elephant in the room with this whole Roth conversion process, and that's the taxes that you'll pay for converting the money into a Roth IRA. On the surface, yes, this stinks. No one actually wants to pay taxes for doing this, and to be honest, there's no way of getting around it with a Roth conversion. But if you had to choose between paying more taxes or less taxes, then which one would you choose? Because with a Roth conversion, you'll most likely pay taxes at a rate that's less than what you're paying with your current income. The money you convert will be taxed as income by the federal government, so those are the tax rates that we need to pay attention to. Let's say before quitting your job, you and your significant other had a combined income of $150,000, which would put you in a 22% tax bracket. If you decide to leave work and retire early, then your taxable income will immediately drop to zero because you're, of course, a bum who doesn't have a job. If you converted, say, $45,000 from your 401k or 403b to your Roth IRA, then that amount would be taxed as income. But the question is, how much? Since you're married filing jointly, we'd account for the standard deduction of $25,100, which would drop your taxable income to $19,900. That would move you from the 22% tax bracket down to the 10% tax bracket, and you'd only have to pay $1,990 on your $45,000 conversion. One other thing to note is that this is all based on the tax rates today. Now, I lost my crystal ball the other day, so I can't really predict what the tax rates are going to be in the future, which means that these tax rates could change over time. This isn't anything to be too concerned about. It's just something that you want to keep in mind when you start to do those Roth conversions. There's one more important step to the Roth IRA conversion, and that is the ladder portion. When you convert money from a 401k or 403b to a traditional IRA, then to a Roth IRA, you have to wait 5 years before you can touch that money. Think of it like planting a seed today, then having to wait 5 years before you can pick the fruit from that tree to start eating it. For someone who is retiring at age, we'll say 40, they'd start their first conversion that year, which then would give them full access to that money at the age of 45, because 40 plus 5 years is 45. Then the next year at the age of 41, they do another conversion so that they can access that money at the age of 46, because 41 plus 5 years is 46 years old. This process would be repeated for however long the money was needed or until you reach the age of 55. One thing to keep in mind is that every year you might be converting a little bit more than you originally did to account for inflation. But once again, this is nothing to worry about. It's just the cost of doing business in general. Whether you were doing a Roth conversion or not, you'd still have to account for inflation with your normal expenses. 55 is the magic number because at that point, you'd have enough Roth IRA conversions completed to where your expenses would be covered through when you can fully access that traditional 401k money at the age of 59 and a half. So you wouldn't necessarily need to convert any money at that age if you didn't want to. As you can see, you're essentially building what looks like a ladder by converting money today that you plan to live off of in 5 years, hence the name Roth Conversion Ladder. I don't want to downplay the fact that this whole process is going to take a decent amount of planning. Let's be honest, you're going to have to project how much money you're going to need to live off of in 5 years. I don't know about you, but I barely know what my life is going to look like in 5 months, let alone 5 years. That's why it's always important to be able to stay flexible with your spending. You should have a little bit of cash reserve to help out if you happen to reach that 5-year period and you need a couple $1,000s more to live off of than you originally thought. This is something that I'm sure a lot of people pursuing financial independence or early retirement already know how to do, but it's at least worth mentioning to keep up on that flexible spending skill that you've learned along the way. Another disclaimer with the Roth Conversion Ladder, there's going to be that 5-year window where you're converting money from your 401k or 403b to your Roth IRA and potentially not earning any money. For this period of time, you're going to want to have some cash set aside to live off of, and this can come from things like cash set aside in a bank account or even money from a taxable brokerage account that you've been accumulating leading up to that early retirement date. I know this sounds outrageous because the amount that needs to be set aside could be quite a bit of money, but let's be honest, no one ever said that retiring early would be easy. Keep this in mind, and I say this all the time to burn it into your memory. Everyone is going to retire at different ages. For some, it might be in their 30s. Others, it might be in their 40s. And others, it might be in their early 50s. The goal is to have the option to retire at an earlier date than the average person. So if you can't do it in your 30s or 40s, then who cares? Because at least you can make it happen in your early 50s, which is still pretty darn young in the grand scheme of things. One more thing to note is that I would caution everyone to make sure that retiring early and not working is something that they really want to do. Now, it's not like you can't hop back into the workforce again if you want to, but in my opinion, most people are going to end up finding out that not earning an income doing something productive is going to get very old really quickly. The good news is that you can test out retiring early by doing something like a mini retirement for 1 to 2 years to see what it actually feels like. I made a video where I walk you through everything you need to know about taking a mini retirement that I'll link up down in the description and at the end of this video as well. If you have any additional questions, please leave them down in the comments below, and don't forget to Hulk smash that thumbs up button before you go, please. Also, down in the description, I will have a link to get on the waiting list for our private financial independence group that will be opening up soon. Down there, you'll also find free stocks, resources, and playlists to help with your financial independence and investing needs. I'll see you in the next one, friends. Done.